All right, let's get the microphone test out of the way here. Let me know if you can hear me across the various chats, including YouTube if you're in YouTube. If you would like to chat and you're unable to at the moment, go ahead and subscribe to the channel and then you're free to chat immediately. That is only in place because pre-stream I was getting spammed by bots. And yeah, that's just for the YouTube side of things. For everybody else, let me know if you can hear me in the various chats going on. And we'll get rolling here in a little less than a minute. All right, let's get the music under control here. Adjust my microphone a little bit, and we'll get rolling. So let's bring the music down. We'll roll right into Market Madness Technical Analysis Wednesdays. All right, and let's go. Hello and welcome to Market Madness Technical Analysis here on Landy's Crypto Corner. Today is Wednesday, October 25th, and we're going to take a look at Bitcoin. We're going to see where it's at. We'll also check out Dixie, gold, and some traditional markets. And if there is time near the end of the stream, after that is done, then I might take some requests for technical analysis here on some of the coins and or indices that you'd like me to check out. Let's start by taking a look at the Bitcoin in 60 seconds chart. Yesterday's Bitcoin in 60 seconds short video. So if you have not seen those, they are in the shorts feed under my channel. They're pretty easy to miss when they go up live. Shorts tend to get buried pretty quickly. So if you have alerts on, you should get those. If not, you can always just go right to the channel and check under the shorts feed. I typically have one up around... lately it's been 6 p.m. Pacific Standard Time, but anywhere between 6 and 7:30 p.m. Pacific Standard Time, depending on what's going on in the markets and my life. Now, we are looking at that particular chart right now that I typically use in those shorts videos here on the daily time frame. And we can see that Bitcoin is still right here up against the monthly. We've seen 2 further tests into this area since we last spoke on Monday. We did see a little bit of a low-term time frame deviation above the monthly there to around 35,157. If Bitcoin does break through this area, it would be fairly extended to be fair. And I would still be targeting this 36,200 weekly to somewhere around that 37.7, possibly move to that monthly above at 38.5 to the weekly at $39,000 to $40,000. Now, do I think that's the most likely thing to happen from here? Not really, not without at least a little bit more consolidation in this area. And, you know, as long as Bitcoin is above the upper second, though, it still has the chance. It's still in full-on expansive mode here on the Bollinger Bands. We can see BBWP down here is still not maxed out just yet. It's sitting at 97 over 89. Now, that's pretty important when looking at BBWP because BBWP, you know, the moving average has to catch up. So we'll see BBWP max out most likely and or sit somewhere above this 90 read. Currently at 97, that 97.22. But it's going to take at least a day or two for the moving average to catch up. And even after we see volatility drop under the moving average, we can still see that upper second standard deviation, or we will see that upper second standard deviation continue to expand to the upside as the basis catches up. And what that will offer up is, even though we'd see a bit of a volatility cool down as Bitcoin is going sideways and up in this move, we would likely see the upper second standard deviation and pass the highs and get to around the weekly overhead above that 35K monthly that was just tagged. So keep that in mind. And I've spoke about this many times on the lows when looking at expansion to the downside. For those of you that have been paying attention, it's the same thing for expansion to the upside. So when we see an impulse through the upper second standard deviation, and in this case, the upper third as well, after some nice compression and a nice stair step in higher low fashion from the lows, right on to that monthly, what I would expect to see is Bollinger Bands expand past and then get retested. That doesn't always happen, right? Things can just go sideways, reaccumulate, and then give another try after a bit of compression. But in this case, when we bring this out to the 2-day, we can see that the 2-day is still expanding and has room to expand. This is going to close with today's daily, and this is at 84/50. So the moving average is quite far away at the moment. And this does mean that, this move will continue on those higher term timeframes in terms of its expansion and pressure to the upside, offering up more possibilities to continue to test the area at 35K and possibly above. Now, the flip side of that is, because volatility is so high, it does allow free movement of price within the bands in a much easier fashion. So when volatility is high, we can see volatility remain high and Bitcoin mean revert very hard. So keep an eye on the daily here at 32.4 to the daily, weekly, and monthly level at 31.8. That would be the warning that things will come down to the upper first standard deviation, which is currently positioned at 31.2. It's likely going to be somewhere around, the 31.5 to this daily, weekly, and monthly at 31.8 after today's closure. And realistically, it's only below there that we start to see volatility sharply drop, as we would see a mean reversion back to the basis as the basis is rising. So basis is currently coming in at around $29,000. I expect that to be somewhere around, $29,500 to possibly even $30,000. I would lean more towards $29,500, to be quite honest, today, as we did see a few more larger candles up here after the breach of the daily there at 32.4. But I can only really give you an estimation until this indicator is complete with a projection on where the basis is coming in. That hopefully will be something that I will show you fairly soon, where we will see what the projected basis and standard deviations will be for the next closure or the coming closure. That's going to be a really handy tool for gauging expansion areas where the moving averages are headed as well, that being the basis in this case. And then we kind of go from there. Now, we are going to come back to the daily again, but on a different chart. This is a clean chart, not the Bitcoin in 60 seconds chart. This is our live stream chart here. We're going to get rid of the Bollinger Bands, and I saw that in one of my chat messages, somebody actually stole my thunder before I got to it. I was looking at this last night, and that's the the moving average stack. And credit to JR, he got to it before I did. But this is, if you're familiar with Crown and or Caretaker, this is very closely related to the CT MAC cross, which is the moving average crossover indicator, in terms of the specific EMAs that they used, very well tuned for the crypto markets. So no need to reinvent the wheel and or bring over some of the slower moving averages that are used in traditional markets. And in this case, we have a 9, 21. Hold on. Let me get the arrow here. We have a 9, we have a 21, we have a 55. We have a little bit extra for me. So we have a 200 SMA, we have the 50 SMA, and the 200 EMA. So it is a bit of a mix of EMAs and SMAs. And in this case, you can see that the 9 EMA is coming in at 31,375. That's likely going to update pretty sharply today. We can see that the 21 EMA is coming in at right around 29,500. So it is leading that basis band on the daily, which for the Bollinger Bands, the basis band is the 20 simple. So we can see that is, just around $29,000, and then the 21 EMA is about $500 to $600 above that, and rising pretty sharply at a steep angle here. So I mean, we've got basically between a 12 and 1 o'clock angle on the 9, and about a 1 o'clock angle on the 21. So nice expansive move. This obviously is just to gauge where some of these moving averages are. Now we still have the SMA over the 200 EMA. And one of the things that I've talked about with you guys a lot is I like these particular crosses for gauging if mean reversion is a more strong possibility in the near term. Now, in this case, we can see when the 200 EMA is leading the SMA, meaning if it is above it, right? So downside move, we see the 200 EMA is above the SMA here, indicating that further moves down are going to become good opportunities for mean reversion to the 200s in that case. So whenever we see, in this case, we're seeing the opposite. So the 200 EMA is down there at 27,360. The 200 SMA is at 28,150 or so. It is still likely to get pulled back towards that, even if it's on a crossing basis and both are headed up and it's above support. That's just the look that I like on EMAs with SMA EMAs that are of the same length. So in this case, I do expect the 200 EMA to begin rising pretty sharply. We do have the 55 over the 200 SMA already, and we're really awaiting a full stack on the daily here to really start expecting, it to be much more difficult for bears to push this back, and likely this gets continuation to the upside. Now, when looking at the weekly, you can see that there's somebody that really likes that the 20s, the simple and the EMA twist, and they have a specific name that they've coined for it and become known for, and they were calling for much lower prices. They were not correct. And just like the people screaming about the 200 SMA, which now Bitcoin is above, being broken below again. Well, we deviated below and then we dipped below it again and it rejected right here. And now it's all downhill. It's going to take out this 19.5 and then it's going to take out the lows, 12K any day. Well, that's, they were blatantly ignoring the 200 EMA holding support there. And the 200 EMA was what was the primary rejective area that once was broken above at that double top from the lows. We dipped down 19.5, impulse above it, retest, consolidate, run the highs again, a little bit of a higher high on a close as well, and then come back down, retest that 200 EMA, and then grab onto the 55 and move right on through. So this really does look good. And in the next weekly, if Bitcoin can close above the 9 EMA, we're likely to see the 21 cross over the 200 SMA here. That is something that we'll get a little bit more into on Friday. But the implications of that are that, maybe there is some sideways and consolidation ahead of us, but probably looking at things moving higher, especially if we do see any kind of a weekly break above that monthly at $35,000. And a reminder that the monthly close is coming in at the, not too long from now. It's a little less than 6 days. Well, it's a little more than 6 days right now. At close, it will be 6 days of this daily at least. In this case, we can see that the 9 EMA and the 21 are right on top of each other. We have we're looking at this low down here being confirmed as a macro low. For those of you that have been around here for a while, and we discussed this since Bitcoin put in this candle back here in January, that this is a major low. What we need to see is a closing higher low from there that takes out some sort of a lower high. Well, here's a lower high right here that was put in July, confirmed in August. We come down, and now we are breaking that lower high. And if we do see this close here or higher, meaning above 31.8, then we have a higher low. Thus, this prior low with the low wick there at 15.5, which, remember, we called that almost to the dollar. To be fair, it did come down about $27 below there. But this is going to most likely confirm this as a macro low. And that's where, there's a lot of bear copium going on right now. And I get it. The structure and the possibilities were there for things to take out the lows at one point. We only had a major low prior to this candle right here and this week specifically. And quite frankly, it does appear, it's a little early to call, 6 days and 6 hours, but it does appear as though we are going to get this solidified as a macro low with another monthly major low put in. Does that mean that this current major low area can't be tested again? Well, absolutely not. The possibilities are really only beginning to show themselves as this becoming a much larger range until we turn back on the Bollinger Bands and we see, no, I don't want the arrow. I want this one here. We'll turn back on the Bollinger Bands. And this is going to be until we see, oh, geez. Let's do this again. Let's try that again. There we go. All right. Until we see the upper second standard deviation of the Bollinger Bands closed above, specifically closed above on a monthly time frame. Not wicked above, not wicked into and up into the upper third and then closed below, but closed above. And that upper second standard deviation is at 40,675. This will adjust to the upside, maybe even to $41,000, $42,000, $43,000 if price does begin to push up against it. So it will adjust in between the monthly close. So pay attention to that. If we do see, especially this monthly candle close above the upper first, which is at, currently it has moved. It was at 33,200. It is now at 33,600. So if we see a monthly close above 33.6, that would be above the upper first, giving us the bias that the upper second is likely to be tested. Now, of course, there is the technical support and resistance levels above $35,000, right? Needs to get above there. Needs to get above the 38,500 monthly close. It needs to specifically, even before that, get above the breakdown from that area on the monthly at 37,5 to 6. And then above there, the next logical area is the close open up here around $45,000 to the wick highs at 48 of that particular lower high from this uptrend. We had the lower high and then lower low breakdown, creating the downtrend, but very quick shift, all things considered. Now it doesn't feel that quick. It feels quick it felt like a very long time from that breakdown to the lows. That was from the breakdown candle of this wick on a close, which was May of 2022, until we saw our first up candle of January 2023. It actually was pretty quick, to be quite honest, to put in that particular macro low. Now, in this case, the upper second is at 40,700 or so. So that has updated and moved up a bit. As Bitcoin started to breach the upper first standard deviation, I would expect that to be somewhere around, if Bitcoin continues up, somewhere around 42, possibly pushing 43 to 45 if Bitcoin's pressed right up against it. So we will really only have to keep an eye on that if we see a break and daily, weekly closures above $35,000 at that monthly close open low from June of 21. So, it's something to really keep an eye on. The other thing to keep an eye on is that the momentum oscillator is still pointed to the upside here and projected to go much further here on the advanced Stoke, which you can find over at app.crowntrading.net. No, I do not have any affiliation with them. I'm just a big fan of their developers. There is a free Stoke pivot that you can get. It's the BA reverse Stoke. It's searchable in the indicators tab up here. This has the pivot at $23,000 now, which is just below a monthly support resistance level that we talked about on the lows. That was kind of the line in the sand. I think I took it off the chart here because I was, we're working in the upper range here. But the monthly at 23, that's not that guy. It's this close open right here at 23.3. So we see that the momentum pivot for the monthly is right below there. This, of course, will update, and it's likely going to update somewhere around where the current low side structure is coming in for the close, for the closes on the monthly. And that's going to be this most recent close open at just under $26,000. You can call it $26,000 for to make it easy in this case. The other thing that I want to point out, I've been seeing a lot of this, man. There's a lot of narratives that just are not very well thought out, and or they're purely for engagement farming. But I want to call this out because this is volatility. So this is the BBWP volatility on the monthly, where it's consistently stepped it up in terms of the volatility lows. But when we see the cross on the monthly, let's go ahead and point this out here. We can see that we got the cross here in August of 2020. We got this cross here, and volatility is direction neutral. So keep that in mind. This is literally looking at expansion only in this case. So, and we're projected to get across if this monthly closes here or higher, specifically above 31.8, and that upper first, we'll definitely see it cross at 33.6. Now, the reason why I'm pointing this out is because, there's a lot of bears that are having trouble accepting this move up. And, it's the same for the bulls over here when we had the wick lows on the daily breakdown at, what was it, like $28 to $29,000 back in this candle here in May, which just happens to be the candle that's marked. Now, the reason why these are marked is because we saw expansion of volatility from these candles. So we see expansion of volatility where? When Bitcoin breaches the, we saw the close above the upper first, and we see a subsequent close open on that upper first, above that upper first area. So when it updated, it was already projecting to be above on this candle, the candle before. And then when it closed there, we got confirmation of BBWP being up over the moving average, thus kicking off expansion. Now, you still saw residual compression. And the reason why it's lagging because it's lagging from the BBWP is a little bit of an early indicator where the bands are lagging from the basis move to the upper first. So they're compressing a bit as they're still reading this basis move. We saw Bitcoin right around the basis of the Bollinger Bands here for quite a while. And then the expansion kicks off. We backtest, and even below, we did not see a close open below, if I remember correctly. Yeah, this just barely closed above, if I remember correctly. I just want to refresh my memory. Yeah, we saw no closure below, so high technical high, might have been painted on a close, was not a breakdown from the wick. So the very next candle in October of 2020 breached and closed above the upper second standard deviation, and that kicked off expansion aggressively. But we saw the etchings of it already, kind of telling us that this move from August, after seeing initial expansion, this move back down in September was a good buying opportunity prior to an October to 2020 to March of 21 bull run, right? Now the flip side of that is the last time that we saw expansion. So the most recent time that we've seen expansion before what's showing right now and could possibly close that way, well, that was over here when we saw the upper second and third area breached on the monthly, retest of the upper second perfectly 2 times, and then a move back to the basis, thus causing compression of the Bollinger Bands. And then we started to get expansion away from the Bollinger Bands, including breaking down from the most recent wick low. And then the very next candle accelerated that, thus kicking off a very expansive move. We see the residual expansion after that move. We did test down further, and then a climb back up, regain that lower first, test the basis, kind of lose it on a close, retest it, move above it to the upper first. Now, this is going to be where I lean a little bit more towards this being very similar to this move over here in 2020, and less so this move back here, because I am seeing a ton of, see, it's just like 2019, just like 2019. Oh, okay. Well, let's go take a look at volatility. No, it's not. In fact, we saw the drawdown in volatility, which was mean reversion all the way back here, including to the lows. We saw volatility expansion, right? From the, but it was not on the move to the basis. We saw the expansion after the closes below the lower first and second. We also still had downside angled Stoke at the time. So when we saw that expansion, then we see it flatten over here. It starts to flatten and then move back down below the moving average on BBWP as Bitcoin mean reverted back to the basis and then retested the upper second standard deviation, thus kicking off a bit more expansion. But it retested and closed above the upper first. And you might be thinking like, well, that's the same thing that we're doing right now. The look for volatility was not the same. And we did not spend enough. We did not spend very much time below. What is this? 25% or so on volatility. So volatility was very high, and then we saw the real volatility cool down once Bitcoin rejected the upper second standard deviation here, got the compression and mean reversion back to the basis, thus cooling down volatility aggressively, and then we get the real expansion. This looks more like real expansion to me than not. Could I be wrong? Absolutely. But I'm just showing you what I track on a regular basis for my methodology utilizing volatility. And I am a volatility trader. So, this is, we take into consideration trend, support and resistance, volatility, and that all creates momentum. The other thing that I want to point out here as we're coming into, we'll revisit this, next week when the monthly closes, but the quarterly is also above the basis. And, we've only really seen one test of the basis in the prior market, right? In each bear cycle. So in this case, we see the basis here, and I'm on the index. We see the basis is tested on the quarterly here in 2015. We get the bull run after. We come down towards the basis, do not directly test it. Come up, quarterly, by the way, where did it reject? Upper second standard deviation. Then we get the test of the basis. Where? Well, that was March of 2020, the January quarter. We see the test of the basis, and then they move through the next couple of quarters above the upper first, and then, of course, expansion above the upper second and third. Now, obviously, this is going to look a little different than many of the other charts when using bands and standard deviations away from the mean. But in this case, what I'm trying to point out here to you and illustrate to you here is that Bitcoin lost the upper first on the Bollinger Bands here, and then moved to the basis and even got under it. It held around the basis band and then through it and then traded right above it, and now is moving to that upper first standard deviation area. Just so happens to be what I called out at the very beginning of the stream, that $39,000 to $40,000 area at that weekly above the monthly at 35 and the monthly above that at 38.5. We have a weekly close right at $39,000 to $40,000, depending on your exchange, actually. So that is exchange specific, but I do like spot, which is at $39,000. I would give it room though if price does, I would give it room if price breaks 35. It might not get there immediately, and you kind of don't want to see it get there immediately without some sort of a consolidation period, at least on the daily. But we are starting to see the consolidation on the daily. Let's go ahead and reference the daily pure Bollinger Bands again, just so that you have a clean chart to look at when looking at Bollinger Bands. You can see that this is not what I want. I don't want the Coinbase chart either, actually. This is actually the old Renko stuff. I've got a lot of previous stuff on here that I was going through today, just kind of looking back to where we were on the lows. And some of the very good analysis that we all put our heads together, and then I presented for you in my view of things. But we can see that the upper second standard deviation right now is at that 33.5. Of course, remember that is the upper first on the monthly is at 33.6. So we do want to see, price closing the monthly around there at that upper first area to really start to get excited for possibly another leg up on this particular move, maybe after a bit of consolidation. If we do see it before then, you're going to know wick highs break at 35,157. We're going to see most likely a move to the weekly overhead in the 36.2 to 37.7 area. But in this case, if we do see closures today below, so for instance, meaning this current daily close by end of day, if it closes below the upper second standard deviation, keep an eye on where that upper first is, that 31.2 area to that daily, weekly, monthly area at 31.8. Now, I do suspect, again, like I said at the very beginning of the video, I do expect the upper first to aggressively move up to around where this the daily, weekly, and monthly level at 31.8 is. And really anything that's closing above this daily at around 32.4 to that 31.8, looking good. Looking good to keep testing this monthly area. The 2-day chart is suggesting that anyway. And we did just have a 3-day open as well. So let's go ahead and, well, let's look at a 2-day Stoke here. You can see that it is pivoted at $30,000. That's going to update at close today. We're going to see the 3-day. You can see on the 3-day, looks very, very good. We're just really starting to get this expansion rolling here. So upper second is currently at 32,450. So all kind of coalescing around that area at 32,4. And this is going to close, it just opened, so it's going to close on Friday. And we can see BBWP lifting off well above the moving average here. A little over 40% above the moving average. Now, obviously, if it goes sideways for a closure, you're going to see the moving average catch up, but this is implying that the move is still ongoing and likely to keep going. We can see the momentum pivot is at 31,252 on the 3-day chart. The 4-day closure, also coming in on Friday's closure, is above the upper second standard deviation, thus kicking off aggressive expansion. And that is pivoted at 32,250. So a little bit below that daily. We can see that this is vertical takeoff of volatility, moving average chasing by almost 40% in this case. We can see that the 5-day, which is also closing, guess when? Friday. In this case, we can see above the upper second standard deviation yet again. And where's that pivot coming in? $32,000. So right around our breakout area. And I wouldn't be surprised to see this retested, by the way, as Bitcoin aggressively moved through it right to another zone that we already had at the weekly and monthly area around 35. So I wouldn't be surprised to see this retested. What I'm illustrating here is on the 5-day, which 5-day close over close is expanding aggressively. This gives Bitcoin the bias that even on daily moves back to support or deviations below the support very likely are going to be picked up and are very likely a good opportunity. That doesn't mean that it's a definitive good opportunity, but it's something to evaluate. Not financial advice, obviously, but this is expansion to the upside. Don't fight what you see right in front of you. The momentum pivot, which will update at Friday's close, is pivoted at 29,150 currently. So plenty of room. And then, of course, we have the weekly. The weekly upper second standard deviation is at $33,000. So by Sunday, you want to see $33,000 closed above. That also is going to be kind of the main thing to watch for on Sunday. If we see an upper second standard deviation closed up, the upper second standard deviation closed above at 33, then it's very likely that Bitcoin could see that monthly close above that 33.6. So now, granted, Bitcoin is still playing around the current high right now. So, but weekends can be a little goofy and low volatility, although this past weekend was very nice in terms of trading and kind of giving us the idea that somebody knew what was going on over the weekend, right? Coming into Monday. Well, the upper second at 33. We've got the upper first now at 30,800 or so. I expect this to be around 31, maybe even 31.2. I expect this to move up, quite aggressively on the weekly, but still chase price if it is closed above, obviously. And then we kind of come back to it. This looks good. Pivot is at $27,000. So it looks very good on the weekly. We did, of course, cover that there was a 2-week close. We're seeing the etchings of volatility expansion, which, by the way, this volatility expansion is the lowest it's ever been. So, and in this case, we got a perfect pinch on the bands here. The last time that we had a pinch like this on the 2-week was to the downside, and this was the rejection at the upper first in 2020. So it was your 2019 high, lower first to upper first rejection, and then lower low for the dump off there. But of course, this was totally a black swan. We couldn't tell that this was a downtrend when this lower high came in or anything. Man, that bugs me so much. By the way, I want to bring this up because this bugs me. And there's people that I believe are some of the best technical analysts that are public facing on YouTube, Twitter, and that kind of stuff, still call this a black swan. This is not a black swan. Not by a mile. This was a downtrend on the weekly. We had a downtrend. We had an attempted trend break. We did get a trend break on a close, to be fair. It closed above the last lower high. But it did not close above the wick. It spiked the wick and rejected. That was a huge warning sign that if this puts in a high, which it did in February of 2020, it put in the high right back to the basis. We know that if it closes below the basis, then we target the lower first at minimum, below the lower first, lower second. Yes, it went further than many expected, but it was not the move down was not a black swan. The news about lockdowns and like everything else that was happening at the time, that was already out there and already being widely debated. So, it's just not, I don't think it's realistic when structure was right there on the weekly showing us that it was not a black swan event. But there's a lot of people that I believe are very good analysts that still refer to it as a black swan, and I think they're 100% wrong. So just want to make that very clear. All right, so let's get off that for a minute, and we'll go to the 3-week as well, because the 3-week is not yet expanding, but if we start seeing we've already got the weekly expanding. We see this follow through with the next 2-week candle, which of course is going to be in the beginning of November when that closes, around a little after the first week of November. We're going to see, actually, you know what? It might be the first week of November that this closes. Yeah, this will close the first week of November. So the 2-week starts expanding. We see the 3-week is right up against the upper second, which is at 35.5. It's likely that we see this start to follow through on the 3-week, but this is all contingent on 35.5 breaking within that time period, of course, and then getting that close above. The 4-week is a little bit different than the 3-week. This will be closing with the candle on the first week of November, at the end of the first week of November. And the upper second standard deviation is at $34,000. Now, this did move up a bit. It was like deeper 33s rather. This is, to be fair, the way it's positioned is positioned for a rejection. But if we do see a closure above, what you're going to see is it spike to expansion very quickly. All right. So, and that is, everything like this is your warning that, we saw this position to the downside a bit. We saw the etchings of the upper first moving here in September-October timeframe. We saw the pinch right here at the close above the upper first. So the next close, if it's closing right up against the upper second like this, it's likely, in the next, monthly candle, next 4-week closure into the November closure for the monthly. If it's likely that we're going to see, a move above that upper second if Bitcoin is playing above the upper first in this case. That's just, my experience with bands across many, many assets over longer periods of time. This would then, further solidify the continuation. So we did see, expansion here initially off of the move back to the basis, and then the slight expansion up away from the basis as the basis moves and swept under price action. And now we're seeing, we saw a back test of it as volatility cooled down because the basis was tagged again, and then a move up, thus re-expanding. This would be your picture perfect buy zone, which was at the this was at the lows there at 24,800 or so, 24,900 in this case for spot price. This again painting the picture that this is not necessarily like the 19 to 20, but more like the beginning of the move from 2021 into 2020, end of 2020 to beginning of 2021. Ooh, got to get that right? Okay, so momentum pivot is also all the way down at 26,800, so slightly under $27,000. Looks pretty good so far. A reminder, the pivot for the quarterly coming into the end of the year. So if we do start seeing things follow through on those time frames, the pivot at the end of the coming into the last quarter of the year is 24,400. If we see Bitcoin closing substantially above there, not only will we see the initial cross here, we will see a completed cross. Now, it's probably better to look at this on the on the actual index here. And again, it's going to be about the same. So they've been closing in across exchanges around the same general price. So 24.4 is going to be that area to watch coming into the end of the year. Of course, we're going to probably see a lot of things decided in November, whether it's a continuation or rejection, and kind of go from there. As for lower term timeframes, I would not concern myself with them until I see volatility cooling down on the daily. So maybe if you want to get like really low term time frame, which we will, just to go through the volume map in a little bit. But other than that, I'm actually going to take a look because I see a lot of conversation on one of my screens over here between you guys over there. I'm going to take a pause and just kind of look through this before we move into Dixie and gold. And while I'm doing that, I'll also look over here in YouTube. Hi, Cheryl. Hi, No Name. Hi, Roka. Got a few others here. They're just not chatting. There's actually quite a few others just not chatting yet. If you guys want to chat on YouTube, if you're not subscribed to the channel, go ahead and subscribe, and you're more than willing to come in and chat immediately. All right, so for you guys that are talking about that kind of stuff over there, yeah, that's more, prop shop, trading firm stuff. Yeah, not really relevant right now for this type of stream. Maybe if we want to get into, we will. The reason why, just so you guys know over there, there's some for people who are not in some of these chats. For those of you on YouTube, there's a group of people that join these streams that are prop shop traders. So most of them are students studying for 24 and 50 FINRA 24 and 57 exams. So part of the conversation that's going on over there is about options. Options are not something that I'm going to get into right now until we see ETFs launch. Like that's when we see the launch of ETFs, I have some materials planned to kind of talk about options and what they are and how to read the Greeks and, the basics of trading options and some, typical strategies. But I will be going deep on that stuff. But I have not introduced a lot of the public audience to option stuff. It's all been derivative trading, spot trading, stuff like that. So, but we will get into that, and I will be talking probably a ton about it coming into an actual launch of a spot ETF. Yeah. All right. So let's go ahead and take a look at Dixie. See where Dixie is. So let's move into Dixie now. We've got a nice little bounce on the daily, right around the area that we spoke about. So, up against that lower second standard deviation, I had mentioned, we could look down to, the highs over here. It did hit that high at 105.5, a little bit below 105.5, came down to 105.36, spiked through, nice bounce right back through the lower first to the basis and headed to the upper first now, 106.70, 107 area on the daily here. So that's likely turning momentum to the upside as well. It is. As the momentum pivot is at 106.18 or 106.11, sorry. Got a fresh cross up that will likely confirm at close today. So Dixie's looking like it wants to rally back up. One thing that I will tell you is because it mean reverted all the way back to the basis after spiking that lower second standard deviation, one of the things you see is it was expansion on the move to the upside, and then its mean reversion back to the base, right? Because of the support area that was broken. We've got 1, 2, 3 lows. That's a consolidation. And now it is in for a bit of re-expansion. If we do see it closing above the basis and especially above the upper first, and we'll see more aggressive expansion. I would still be, looking right back to the highs then around the upper second at 107.08 to, what are we looking at? 107.34, possibly a run to 108, maybe a little bit further. Really depends. The 2 days probably still pressure down if I had to bet. No, it's actually looking to cross back up. 106.69, in fact, is the number to cross that back up. That is not closing today, so it's got, we'll take a look and see what the 2 day closes at on Friday because it will close with Thursday's candle. But this looks like a 2 day reversal. It was a return to the mean or the basis here. And then if it can start closing back above the upper first at 106.57, I would look again right around the highs to the upper second. Now, one of the big things that I will say is you might want to watch it too if it starts to get there because if it closes above, that's going to be re-expansion. Now, this was, on the move. We weren't getting expansion. We're just getting a march. So it's actually a consolidation. So one of the big things is here it's going to become critical to kind of watch is closures above the upper second standard deviation are going to beget expansion on the 2 day. If it does expand above 108 and break above that, it's probably going to go on a run, 110, maybe 112 at the closing highs up there. Maybe even spike the highs at 115, 116, right? But it's also the opportunity for a rejection. So if it does reject at the upper second, we could see an expansive reversal to the downside that takes out the lows on a close, at 105.73 to the wick low. So that's kind of the opportunities is on both sides because this is a consolidation. So push and close above the upper second and take out the highs and especially start expanding above that 108 region. This is likely going to get continuation to the upside. Rejections around that area that then, cause further compression that then expand to the downside, lose the basis, going to be the first warning signal for any kind of bulls, Dixie bulls here. That's where, you could see an expansive move to the downside. To be honest, it's still looking just fine. 106.86 is the 3 day. It's, spiked the upper second rather, on the 3 day. Jeez. Not having a great day today with the whole talking thing, huh? Right? The upper second on the 3 day was spiked. Lost the upper first on a close open, thus cooling volatility down quite a bit more, but a spike down towards the basis and then move right back above, opens up the upper second standard deviation at 107.73. And we see 106.86 is the pivot there. And this is, this is going to close today. So that pivot could update It's very close to where price action is right now for Dixie. When looking at the 4-day, did close open below that upper first as the first standard deviation away from the basis, starting to, lose it. Are seeing a cool down on a move that's been expansive to the upside. So, bringing into play 108.50, if it does breach the highs and that 108 region, at least at the upper second. Now, this has got quite a while to close. It's pressure down on any closes below 107.31. Pressure down on the 5-day below 107.14. Weekly is going to be the same as it should be. The 5-day is going to close before the weekly this week. No, it's not. It's going to close with the weekly again. Nice. So we're on this will be, wait, right? Yeah, because today's Wednesday, right? So Thursday, Friday, no. So it's going to close open on the Monday candle. And yeah, so we'll see the weekly update pivot before the 5-day, correct? No, it's going to close on Friday. I'm screwing myself up there. And to be fair, the weekly has, been maintaining this upper first, still above the support resistance break, held as support for many 5-day closures now. Upper seconds at 107, 78, 107.80. It's going to move up to around that 108 region. The weekly should be very similar to the 5-day, because of the close open happening at the same time last week. So, or the day before, I don't remember. Either way, doesn't matter. Setup is very clear. With low volatility, a move and a close back above the upper first and upper second is going to start expanding to the upside. And until we see a close above the upper second and the wick high at 107.34, that becomes a possible area of interest for a rejection, especially when looking at that 2-day, which, curling back down to be fair, right around the high there. But if it breaches back above, we're looking at expansion to the upside, quite frankly. And when I do say breaches back above, I do mean on a close. So. You're going to trade options with your broker, Cheryl. You don't need licenses to trade options. You can trade options through your brokerage account. All right, so let's go ahead and look at gold. We can see gold's back playing around the highs still. Very nice. Well above the upper first still, which is coming in at 1954. Now, this is the opportunity on gold. So it's either going to top out here at the highs at around $1997, $2,000. But if we do see a close above, we're looking to the upper second, somewhere around 2010 to 2020. I would actually give it some room because we're seeing a nice 2 o'clock position on the standard deviations of the bands. We're seeing a nice beginning of a daily curl to the upside for the lower first. We'll be looking for a follow through with that lower second, and then start seeing the bands really start to follow through to the upside with the upper and lower bands. And once the lower second standard deviation is above the most recent low, there, to be fair, you could call this, on a swing chart, it's going to call this a high to a low and then a high to a higher low, provided it is closing above this guy here around 1982, currently trading right around that area right now. Being closed above, put in another higher low. Realistically, just looking right back to, somewhere around, the 2K region at the high here to 2010 to $15, possibly 20. When looking at that, that's where we're looking at where it's traded right now. I'd be looking at this little bit of a low over here, which is right around the spike high here, to the I believe that's also, yeah, about 2020 is this high over here, to the wick here at 2030 around this this lower high. So I would be looking that way if it can start to set this low here. It's looking encouraging. 1980 is the momentum pivot on the daily, but it's more about volatility. We can see that we have the residual expansion of the bands, even though we had a cool down here. This was the mean reversion back to the basis and then immediately through to the other side of the bands because it ran the bands. We see volatility remaining high, and it's entered a bit of a cool down, but this is like what I'm talking about with Bitcoin. You see it then pass the high. So the upper second standard deviation continues on because the basis is rising in this case. And then we see another test into it. So that's what I would be favoring, as long as it's, closes here or higher, above the upper first. But if it does lose this last wick low around 1953 and the upper first, then I would be looking for, somewhere around 1932 to, 1910 to 20 area as being kind of the zone of interest, which is realistically the close open over here to the wick low, which is 1908, but give it, about a $10 region, around this area if it does breach the high side. But remember, there is above there 1942 at this high and 1930 at this high over here. So, and then, of course, just below that, we've got 1932 right on the close open. It was like right on top of each other. So, yeah, 1932 or so to the 1920, 1910 area. Right now, I don't think that's what's happening. I don't think it's headed that way at the moment, especially when looking at the 2-day still being pressure up. 1884 is the pivot, still expansion. Here you see where expansion to the downside became expansion to the upside. So expansion to the downside, mean revert back to the basis, did not get back under. That means we're going to keep volatility high. Band spread's going to remain pretty high. Still looks like it wants to continue trying the highs. And it's kind of this scenario that was happening with Dixie on the way up. It's like it's just going to keep resetting and going because of volatility. So that's where it's going to stick all your oscillators and warning signs that trend, could be shifting. But until you see, highs put in, you see divergences and multiple divergences, it's, looking more and more like continuation, especially when looking at the 3-day at 1816. The 4-day, which is, upper second, by the way, is at $2,010. The 3-day for that is going to be 1986. So roughly around where it's trading now. 4-day gives it room. Big range on the 4-day. Expansion to the downside created expansion to the upside, as it did not get continuation close over close except for one candle. And then it was right back in to reclaim the lower second, lower first, move up to the upper first, then close above it, use it as support in this current 4-day candle. And then, more than likely it's going to want to try to test the highs, 1820 being that pivot on the 4-day. 5-day is going to be 1882. Upper seconds at 2K. Weekly is 1882, yeah, because the closes are going to be coming in on the same day, just like Dixie. So we're not getting staggered closes, so we don't get an edge from the 5-day this week. Next week, we should. No, we're not gonna. Well, no, we're not gonna get an edge until I think the 5-day and weekly are gonna be lined up until we get. Well, until we get a holiday. So. All right. That's going to be kind of it on gold. my opinion, pretty clear above 1953 in the upper first, looking good. You can take, you can be more aggressive with it, but it's still got to drop that last wick low. So above there, good to keep testing the highs and higher, and possibly, keep pushing that upper second standard deviation. Tradfi or traditional markets. Let's go ahead and take a look. Dow is down. Oh, it's all over, guys. New lows. Come on, Dow. You can do it. No, this is basically what we talked about on Monday. Expansion to the downside, mean reversion, find resistance at the upper first. Perfect bearish scenario, by the way. Scenario. And then back down to the lower second. Now, this can, if it keeps closing below the lower first, it can keep grinding that lower second, possibly swing this low over here. If it closes below it, the low, meaning I would still keep an eye on that lower second. It's either going to grind it down or it's going to close below it and get more aggressive expansion. But then, we're still realistically looking at the next big area below the most recent lows at 32.5 to 600. So that is starting to sound like Bitcoin stuff, Bitcoin's prices. This we will check in on Friday. Just wanted to kind of see where traditional markets were today. Now that is a possible by end of day close over close below the lower second. There's a lot of earnings coming in today, so you can probably surmise that there's some earnings being missed here. It's lower lows, lower highs all the way through on the daily right now. So it is, an intact downtrend. It's still in a reversal area, but it's looking like continuation and expansion. 14,920 rather is going to be the number to even pivot that. And that's all the way up here. So that's basically where this broke down from the supports. If it does close below 14,382 or so, to like 14,385, I'm looking a little bit further down to the 14,300, upper 14,200 area to around 14,200 to 14,215 at these lows. That would be what's next on the board, I believe. Yeah. And then from there, we're looking at, this region right here. You see some dailies on the way up. See the rejection right here. Then it's looking, high. Looking at 14 to 13.8 at that point. And again, context is everything. So I'm not concerned about, I'm not really concerned about NASDAQ until we see, this low taken out right here, this spike low after the consolidation to the move up. If this is taken out at 12,700 to 800, then it's cause for concern. One thing that we will have to keep an eye on coming into Friday is the possible expansion to the downside. So again, lower second standard deviations are either going to act as reversal or continuation areas. And this is going to be on a close over close. Lose the lows. There's still the wick lows over here, but still not, a good look. To be fair, that 14,370, 14,400, right? I'm sorry, that's 14,216. That's that daily area that I was pointing out. Lower second is at 14,373. So if we do see a closure below, that would kick off expansion to the downside a little bit more aggressively on the weekly. And then we do start looking a little bit further down. Actually, on this particular move down, because this is considered the mean from a volatility perspective, it's more like it's coming back to the mean than anything else. And if this closes and starts to turn and it pivots off that lower second before hitting any of those supports, this could absolutely wreck a whole bunch of this could become a gamma squeeze on NASDAQ, to be quite honest. Just keep that in mind. I know it's looking pretty bearish right now, but keep that in mind. I mean, the place to be bearish was at the upper second when it did put in the high. So it was either it's got to make a higher low and take out the upper second, or it's going to continue down. Once the basis broke down, it was, now we know that the lows are the target. Looks pretty bearish, but I would be careful if you're looking for doom shots. Quite honestly, I have the feeling that there is going to be there's going to be some possible reversal setups off of those areas. Looking at expansion again here on SPY. Did it hit our 415 target yet? On the daily, it only got to, again, 417. Really? What did we get to last time? 417.80, 417.02. Damn it. It hasn't yet lost this wick low, but if it does, then I'd be looking, 410, 415. So we're looking left to this area here at 415. So these daily highs here. Then to the lows around 410, right? So highs and then lows. So 410, 415 is the next area to be looking at. This would be also, right around these highs as well. It's kind of like right on this last high prior to the breakout to new highs. So this is an area, again, even if it dips its toes in there, I would be cautious. Unless we, see it ripping faces off to the downside, I'd be very cautious here. On the weekly, it would be a bearish reclaim of this high over here on the weekly. We already saw this, though. That gave us the bias that if it couldn't hold, then it's going to be testing these highs. And that's kind of what we're getting right now. This high over here and this high over here. There's a lot of highs in here and a consolidation. So again, we're looking at all the same areas, 410, 415. So it's 412 on the weekly, to the lows here on the weekly would be looking at 403. So basically 400 points, or 4,000 if you're using futures. Look, it's in a really critical area. Is it getting expansion? Absolutely. We've seen the etchings of expansion, though, many, many times off the lower second. And unless it's going to get aggressive expansion and continue through some of these supports, then we start looking substantially below, 400 to the lows down here at 380. That's where guess what? The bears, the macro bears are right. The lows are going to get tested and possibly lower. But as it stands right now, I'm not, we have to take this structure, this reversal structure in context. And, the drawdown from here is not abnormal after the aggressive move up. More concerning would be the monthly. If you're going to get concerned, you're going to be concerned about the monthly top. But a mean reversion back to the basis is not that concerning either. It's more of drop that lower first at 385, 380 region. Then we're looking at a low run again where the lower second is at around 360 and then possibly retesting the lows, maybe a little lower. I mean, to be fair, did we hit my downside target? Yeah, we did. We hit my downside target from 2020. So we hit the top side of the downside target. We hit the post-pandemic high, and I was saying that it's possible that we could see a hit on that the pre-pandemic high. So yeah, like not too concerned about this just yet. Yes, is it awful looking monthly? Yes, is momentum going to turn? Yeah, I mean that's all right there in front of you. Volatility isn't set up for a particular rundown just yet, though. It's kind of opposite, big cool down on the move back to the basis, moving average is going to chase month over month. It's more about, what happens the end of this quarter into the first quarter of next year in this case. Maybe that's where we see things bomb out. Or they've been floating the banks the entire time. And maybe they turn on the faucet or the spigot publicly with quantitative easing, which probably causes a lot of chaos in the markets while everything repositions, and then printing then sends markets higher from there. All right, that's going to do it for the bulk of today's analysis. Sorry if I'm a little out of sorts. Been very, very tired lately. My son has been having some difficulties in the evenings. For those of you that don't know, he's disabled, and then he has seizures. But at night he has like these precursor to seizure things, and he hasn't had any recently in a while. But he keeps getting like tics and weird stuff over the evenings, and it's been keeping me awake as we hang out with him and make sure he's okay. All right, let's go back to Bitcoin, and let's go ahead and read the chats here. Hi, Jimmy. Good to see you over there. You just get out of training? You got new students? Sweet, dude. You got any that are testing this week? No? Okay, you're loading up the tests for November. All right, that's cool. All right, let's go ahead and kick the music on. Let's go ahead and look in some of the other chats here. I'll give YouTube a chance, where did I put YouTube at? Let me turn the music back on, and then we'll go searching for the YouTube chat. And kind of go from there. All right. Okay, cool. Yeah, so okay, you got regular SIE, and a series 6 and 7. Sweet. Awesome. Well, have fun with that. You have a good day, Jim. And the other guys can hang out. I'll shut the stream down over there when we wrap things up. Yeah, they're more than welcome to hang out. I'll take care of it today. Yeah, thanks, buddy. All right, cool. Let's go ahead and look at what was I doing? Looking at YouTube. Let's see. Let's bring this back up. Funny name, talking about when Powell's going to speak today at 4:35 p.m. Eastern. So, yep, about 1:30 my time. Yes, I will, Cheryl. Thank you. If there's any requests for TA, I can probably do a few today, and then we can come back to it. And I might just go ahead and look at a few that I'm interested in. Just checking on the monitor here. Yep. Cool. So music is coming through, I'm assuming. Yep. Degen chart. I'm getting requests for Degen chart. Okay. Oh, I did not look at the volume map today. Thank you for bringing that up. Appreciate it. Yeah, so while everybody's catching up to the stream, I had a reminder that I haven't pulled up the volume map for today. Hasn't changed much since we last spoke, but let's go ahead and throw on our volume map here for Bitcoin. And we are going to get rid of the arrow. We don't need that. It has been updated 25,997 through the high now at 35,157. So we can see that primarily Bitcoin has been playing in this 15-minute candle high structure from close to the high here. So we've got the closing high to the wick high. Of course, we did get a higher volume spike above here. So just the wick was marked because there was no closure above, and then we saw a retest a little bit earlier today before I came on stream to about 35, 144, so just shy of this wick high, which did come in on high volume, and it was above the most recent wick high. No closures, doesn't get marked on a closure, as it's all just hanging out in the zone. Now the temporary stuff that I told you about, because we are only marking swings, which this get, by the way, if we see 34,000 right here, it's 33,985 breakdown, then the zone becomes that 34,000 all the way down to that 31.8 region. In this case, on the 15-minute here, that wick over here is 31,750. So that becomes the zone that Bitcoin can play in, and that's reflected in the high volatility on the daily. So that is not surprising. But if you want to do temporary stuff, and you're gonna mark lows on the way up when you're mapping continuation like this, you can take these high volume lows. In this case, this was a high volume low. To be fair, this one was as well. This whole kind of area was one big spike, two big spikes. It's kind of at your discretion. You can see that we did also bounce off of this area, not on very high volume. That was the bounce there from this particular low in this range, this tightening range. Again, this is simply a volume map. It is not support and resistance. It is not swing fail patterns, except for when you see them happen at the highs around the volume areas and the lows around the already mapped volume areas. But in this case, we can throw on some temporary lines here to add to the chart here. I've got 3. You can add the 4th there if you want. No biggie. This one over here. But these are not going to be as helpful as the way that we already have it mapped. So they are not as relevant because they are in between areas. So we've got this guy here. This was high volume to this low that was high volume, and you see that on a close held this area on a close and wicked even into that low, but held this higher volume candle on a close here. So that would be this guy over here. Held it here on a close after the deviations down that came in on higher volume. Again, this candle here, nice high volume, but closed inside of this close open structure, right? So looks it looks like, well, why isn't this the more important one, even though it was on lower volume? Well, it closed inside of this higher volume candle area, so picked up pretty well. Then we saw high volume come in right at the high up here prior to well, it was testing this high volume high over here, and then we tested up into it. It was testing this high volume high right here on this spike in volume, and then we got an additional move up to test this high volume high right here. So yeah, how's that? Cool. Does that match yours? Yes, you just copied mine. Okay, but you understand what you're doing with it, right? Awesome. Good. Can I look at Sol? Yes, I can look at Sol. Let's go ahead and look at Sol, see where it's at. I think we checked on this on Monday. I'm not really sure. It had a decent move, if I remember correctly. I don't remember where I was looking at Sol, but I guess it could have been this chart. Yes. Maybe not. Anyway, it might have been like a Binance chart. Let's go ahead and look at it with some fresh eyes here and some Bollinger Bands. Yeah, it looks good. I mean, it's continuing to push this wick high. If it can close above it, you know, I'd look for at minimum continuation locally, right? So That would also be above the upper second standard deviation, still at 32.16. So I'd be looking for this to continue, at least. You know, there's some highs in here, including a spike high around 34 to 35, 35 and a half or so. If it can, it's already reclaimed most of these lows on the low side over here, right? Yep. Reclaim this area, this area. This area is kind of right where it's trading at. You know, it's actually above these lows, around 32.90. So I mean, if it's above 33, then it's realistically, we're looking at like 33.60, 35 bucks. Yeah, 35 to 35 and a half. If it can breach the local area, and you know, it might only end up being on a wick. And really depends on how much more momentum it's got. It's good above 32.68 today. That, of course, that momentum pivot is going to update at the end of the day. I think it's more about the 2-day right now. It's good above 27. Still getting expansion. Daily is... This is where it could push higher and continue to push higher, but it's getting close on the daily to, you know, possibly seeing at least lower term time frame mean reversion to a consolidation. 2 days looking pretty good to keep a consolidation to the upside, and that of course is going to close today as well. The 3 days looking good above 27.28. It's expansion. It's above the upper second. I would say, yeah. As long as this is trading and closing above 29.30, you know, it avoids putting in a 3-day high. Let's see where that falls on the 2-day. Same for the 2-day as it currently stands. And yeah, this is exactly where, yeah. As long as it's above, you know, 29.32, it's looking more likely that it's going to continue testing higher. Main big areas, you know, right now that 35 and a half area, and then above there we can just kind of target weeklies, right? So you know, the weekly looks really good. 21.36. This is lifting off on volatility. It's above these lows. Yeah, I mean, it takes out 35 on the daily. It's likely headed 38 to 40, possibly 45 to you know, 50 bucks or so. That's my take. You know, realistically, it's get above these, especially above 38.99 on the weekly. So if it can breach 35 and a half, that's like the next big area. And then above there, we're really looking at like 38 to 40 and then 40 to 50. Probably pullbacks along the way, all that good stuff. And if it does get above, you know, this area here at about 48 bucks, you know, we're just kind of stepping it up 10 bucks at a time here on the highs. I would then start targeting like a deep shot. You know, 70, 75 bucks, 76 bucks to this low. That's this isn't the longest chart for this either, but you know, we're tracking mean reversion. It was a big downtrend, it's reverting back up. That's, you know, exciting. From the weekly perspective, not just the daily, you know, as long as it's above 20 bucks, 21 bucks, looking fine. We had this conversation a couple of weeks ago about the $20 area too. So as long as above there, it's looking up, and to the right. Hope that was good for you. Good enough for you there. Let me know if you have any specific questions. Let's go ahead and look at what we were looking at. Not Link, but Litecoin, I think. It's where we had an example volume map on the 15-minute that I happen to update because I just started, you know, I've been trading Litecoin right along, but I just updated it because I just started using this chart for spot to track it again after we created it on the stream as an example for volume mapping. After the stream, I think it was playing around this area, and then it moved up pretty quickly afterwards, and then it's been playing above 67.80. Put in a nice high volume high. You can see it's kind of like strong half, weak half, almost like if you were to pull a fib on it in terms of volume. So playing really well with the volume map on the highs and lows here. Put in that high around 72 bucks. Let's go ahead and take a look at Litecoin on the weekly here. Let's turn off volume real quick. And let's go ahead and look at, oh, yeah, I didn't actually put these on here, but I didn't actually update the map in its totality. It's okay. Come back to that. Yeah, so closes on Litecoin above you know, 68.57, and especially the wick high here at 68.82, then it's likely going to retest, you know, $70.68, and then it's wick high here at 72.85. Next big area is going to be this low over here at 77. Basically, you can take 76.85, 77 bucks. Above there, it's probably going to run pretty hard to, at minimum, yeah, it's at minimum, we're looking at wicks like 80, 85 bucks pretty quickly. And then it's, you know, the highs in the weekly probably pushing around 90 to 100 bucks after that. That is provided that it can actually push through these areas. And it just so happens that the weekly basis band is right there at these lows currently at around 76.85. So if we can get above there, as you know, it's got to at least close above 70 bucks here. 70.68 specifically, so like 71 bucks. Area is likely to get tested, the weekly basis band, and then possibly throw a wick or two above on the daily and lower time frames, and then we come back to it after that. Again, I want to be very clear. Criteria is that it starts pushing above that 70.68. Otherwise, it's probably in for a consolidation, and then we come back to it later. And if Bitcoin takes a break and the market in general is going to remain bullish, we should see some of the capital flows back into altcoins. I mean, they've been running behind Bitcoin for a while, so with the exception of Link. I forget who was like, oh no, Link's the early mover, man. Like, yeah, I mean, it is. It did move early, but it was following the same path as Bitcoin from the lows. Nice higher low structure on the weekly. Daily, nice higher low structures. You know, after this nice consolidation at the lows, perfect time to get in was like 642 to 645 if you were accumulating. Nice little accumulation zone. Once it broke out, boom, right back to our 680 and then on and up. 1113, still got room to go above 932. This is redlined on the daily for volatility. 2 days just barely getting there though, and look at that, moving average is so far away. This is bullish as F, man. Litecoin looks good. This breakout looks real, to be quite honest. I know there's a lot that it's just a fake out, it's gonna come right back down. No, this breakout looks real. I could be wrong. 71 over 47 on the weekly though. That ain't nothing to fade. If you step in the way of that, you're probably gonna end up with very little left in your account. Even on some pretty hardcore mean reversion in the lower term time frames. This thing can mean revert really hard on the daily and still be fine on the weekly. Looks pretty good. And for right now, as long as it's above 816, I'd say a reclaim of this high here. 830, 850 area. As long as it's above there, it's probably going to be fine. For trend's sake, you take the 815, but you can place your invalidation for continuation higher if you like. At the actual, weekly range break, the wicks of the overall consolidation, but the breakout looks real right now. And likely going to continue if the 2-day and 3-day are to be believed. They are chasing pretty hard, so I wouldn't be surprised if we see lower term time frame pullbacks below some of these higher term time frames, but looks good. In fact, the 4 hours pointed up, 1090's the pivot there, so it's moving quick, man. Yeah, it looks really good. As soon as you saw a link breakout, you thought of this channel. I'm flattered. Thanks. In terms of like, I don't really discuss link a lot, so I'm assuming you mean for the opinion on whether or not this is real. This is a real breakout. Looks good. I would say 12.5, not far away. It's already tested the wicks at 11.5, so 12.5 on the weekly is not far away. It is, still got that $12 to overcome, but it's already digging into the deep $10-11 area. So after that, I mean, it's probably 15 to 18 bucks pretty quick. Yeah, it's I know it goes against like what everyone thinks. Well, traditional markets are falling apart, and it's Bitcoin should be going down, and Dixie went down just a little bit. It's been pumping. It's going to go to new highs, and market's going to be set on fire. Yeah. Watch the chart that you're charting. In this case, looks good. I mean, bond yields are going to bring this whole freaking system down, man. This is just, and then renewing debt at higher interest rates. That's what's really going to be killing everything. So crypto might become a safe haven. And Bitcoin specifically was built for that. So remember what Bitcoin was built for and the time that Bitcoin was built in. It was specifically built for doomsday scenarios in the financial markets. So for those that are surprised by any of this, I think you got to go reread the white paper. So, but that's pretty much all I got today. I see a lot of you guys over there are probably bouncing in and out of that particular stream. Yeah. Okay. Did you guys catch at least the last part of it? Okay, cool. Oh, I see. You were readjusting what was going on. I see. Okay, cool. I see. Yeah, YouTube is catching up. You guys are live. You're not live. You're not. They can't hear you guys. I can still hear you, even though I have it muted going everywhere else. I can still hear you. Yes. Super distracting. No. It's cool. It was it's okay. It was just a global setting. It's cool, dude. No, I told Jimmy I was gonna handle it. Thank you. I appreciate it. Yeah, you guys are awesome. Thank you. All right, I think that's it. If there's no actual questions like specific to what we were discussing today, I think we can probably call it today. If does anybody have any specific questions like Bitcoin, is there anything that I may have missed that you wanted me to cover? You let me know. Is there something you saw that you wanted me to know about? Is there a crazy theory that you have? Just turn this into Landy's conspiracy corner. Okay. I will tell you about my conspiracy that I think some people didn't totally understand. It was a joke, and it's I had said on Twitter because I got a message or two off to the side, not even on Twitter, just like side messaging me like, you know that's not. Are you joking? And what did I say? I gotta scroll through it and say and see what I said. Oh, okay, because of the DTCC stuff. I had said, rumor has it that the DTCC is in on a major plot to dupe degens out of their precious coins and cause the SEC to delay again and perform an investigation so BlackRock can get their discount coin. Pure manipulation. And then you had to say see more to actually see that I'm just joking. Look, the whole thing is like the idea that BlackRock is the one that wants to get Bitcoin's price down because they want to accumulate low. They don't care. Their clients' money is what's going to be used to buy the ETF shares. And their investors' money, which is being spent now across multiple ETFs, it's investor money. That's the seed that seeds the ETF creation units through the creation and redemption process. And they're the ones who then can sell portions of the ETF that they get once it's listed, because you invest to get shares of the ETF. So I mean, there's no IPOs and there's only rugs as ICOs. So this is where investors are headed right now. There's nothing going on. There's no capital in the markets. There's no excitement in the tech sector. It's all just, there's no Silicon Valley bank anymore to prop up all these fly-by-nights that want to, pump and dump companies. This is the newest technology for, mapping AR, environments around you. Like most of those companies have been bought out or gone, and you're not seeing IPOs for anything new. So this is where things are going. Yeah, I agree. So yes, that was just a joke. There's no conspiracy to get Bitcoin's price down further. In fact, one of the primary reasons why price is going up is because there's likely creation units being funded right now. And that process can take a while. They're not going to do it day of. So keep that in mind. And then always remember, the trend is your friend until the end of the trend. And when the trend is unclear, everyone is in fear. So the trend is your friend right now is what I'm trying to say. This chart on the weekly tells us that the trend is our friend. It is no longer unclear. Daily, trend is your friend until the end of the trend. And the trend was pretty clear. Higher highs, higher lows since the last spike low. So there was nothing, you could speculate all you want, but even trend and just mathematically based on closes and opens, there was no reason to look down until we saw a change, a structural change, and we didn't see that. So just ride the trend and have fun. All right, that's going to do it for me. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, please, please, please stay safe. There's like crazy stuff going on in the cities around me. Just be careful out there. Excuse me. Just be careful out there. So above all, stay safe so that you can trade safe. All right. With all that said, Landy out. I didn't mute my mic yet. Sorry about typing in everybody's ears. Have a great day.